Welcome to today's WASDE 360. Your AgriSompo North America experts, Brooks York and Sterling Smith, will guide you through this August report and watch the market reactions to it. Tune in to this evening's daily market outlook for additional information. Guys, turning it over to you.
Month on month, it was a 1% increase where we averaged generally something around a 0.55, 0.6. For the year, I think around a 7.8. Tell us, we kind of get the fact that exports are strong. We understand our domestic uses is pretty solid, or it certainly looks like that. You know, there's a little question mark on our renewable fuels situation, specifically ethanol, but tell us how this inflation could affect us long term. We've done this. You know, we've talked about this before. If you go back a few months, we've really not looked at a correlation between inflation and commodities until we got back to the 70s, early 80s. Do you see that creeping back into the picture, Paul? You mentioned.
Well, if we see, one thing that's interesting about inflation. You know, in 2012, I was on TV talking about corn prices and how high they were, and there's all this inflation. Well, corn prices were higher then than they are now. So correlating commodity prices, which can be very incidental, like we saw in lumber, to overall inflation is kind of a difficult thing. One thing that we could see, though, if we see ongoing inflation, investors will reallocate their money into something called a commodity index fund. And when I put out the COT stuff on Friday, I look at what speculative funds are doing. These are people who are in and out of the market a lot because that drives a lot of day-to-day price action and really kind of moves the market in a more near-term sense. If we were to see money roll into index funds, it's like a balloon. All commodity prices can go up. And that is possible that you will see investors begin to reallocate a little bit. Right now, you know, the stock market's flowing and going, and we're knocking on the door of record highs every day. But at some point, like any other investor, it's going to cross my mind and anybody else, well, this can't go on forever. I need something else. And a commodity index fund is something where you could see money rolling in. And what they do is they buy futures across the board. So that can push everything higher without necessarily having a fundamental driver to push higher like we see with a more aggressive trading fund.
A pretty good explanation there of how inflation can kind of affect us indirectly with the buying that goes on from the outside. Let's look at our three primary fundamental usages here. Exports, you've already said it, and I'll back it up with the folks that I talked to in the export realm. Things look solid. Domestically, things look solid. That leads us to ethanol. And I'm just going to touch on this. Having been on vacation, I was out in Montana. I was near kind of, wasn't a touristy town, but there were some tourists going through. We talked to people at dinner. In my neck of the woods, there's and I'm not gonna get into this on the WASDE, but there's a lot of farm ground that is going to be turned into solar panels over the next 2 years, and not just in one location, in multiple locations where I'm at. Interestingly enough, where we were at in Montana, solar panel farms being looked at. Talking to a gentleman from Pennsylvania that was at a restaurant. Guess what? Solar panel farms that we're looking at. We saw a little warning sign out of the administration last week, I think it was. I've been on vacation, so I still keep up with things. But Sterling, I think President Biden tweeted that kind of the world was on notice. In 10 years, a high percentage of our vehicles will move to electric. Is there some threat? Is there a legitimate threat there in ethanol usage that we need to be watching?
There may be. Potentially, there will be. I know they're taking some really good corn land west of town here in Saunders County, and they're turning that into a solar farm for OPPD, and they're adding some windmills and things like that. But again, you know, you can drive for 2 hours and see cornfields, and when you drive by the solar farm, it's going to take, 18 seconds to go by. So how much that is. The other thing, though, that Biden was talking about and floating this idea, get this, 50 to 75% of all jet fuel needs to be biofuel by 2050. Now, an electric airplane is a neat idea, and if you're not in a hurry, it's probably okay. and they're testing those, and we'll see. But for heavy lift aircraft, 787s, things like that, you're going to need fuel. Now, if you use biofuel for that, number 2 jet is a big piece of that consumption. So while we might lose it a little bit on the ethanol end, we can see that that's a real potential. We may be making it up in other ways eventually. 2050 is a long way away. I wouldn't go buy November soybean futures on that idea, but that's something where we're going to see our whole energy package rebalance and change. And it's something, it'll be interesting, but this is going to be an evolutionary process. And again, his idea was we're going to have 50% of the vehicles be electric by 2030. That's only 7 or 8 years away. Average lifespan of a car, you get 12, 14 years out of them now pretty easily. And heavy trucks, things like that. So we may be a little bit further away from getting that, but we may see a lot of in big urban areas, people who just drive, 5, 8, 10 miles to work, you're going to see a lot of those cars turn electric.
So, Sterling, I'm going to ask you a question, and then I'm going to update the folks on where we're at on quotes real quick. I'm going to ask you this question. Going into this report, and I'll give you about 2 or 3 minutes to give an answer. Going into this report, I want you to highlight 3 items for our audience out there to keep our eye on when they're released. And while you're thinking about the answer to those 3 items to watch, I'm going to go ahead and update everybody where we're at right now. We've got December corn down 5 right now, 5.54 and a quarter. Beans continue to trade in the red. November is now down 15.5 to 13.24.5. Wheat is the bright spot in Chicago. We've got September wheat up 7.5 cents to 7.34. I will mention this though. New crop, or next year I should say, July of 22 is actually trading in the red slightly. So we're starting to see a little bit of that carry being up, which was really good. In Kansas City, we're currently at 5, kind of that same trend where we're seeing some 22 numbers trade slightly in the red. So that's where we're at before the numbers come up, and trading fairly quietly at this moment. So, Sterling, we've got a few minutes left here. 3 things that we need to focus on this report. What are they?
Okay, first one here, corn ending stocks number. The survey says we're going to print a number of 1.27, which is pretty much in the bullish camp. Our number last time around was 1.432. What's going to drive that is this yield number. This goes down below 179. We get to somewhere in this 177 area. You're going to see that number come down. You're going to see that ending stocks number come down. For the soybeans, same story. Ending stocks right now, it's 155. That's not a very big number. Soybeans do not have a lot of room for error. So if we see this yield number, which was 50.8, drop even down to this 50.2, when I adjusted my balance sheet down to that, all of a sudden this number got noticeably smaller and much more problematic. And soybeans, again, trying to guess yields right now. Maybe we do a little better job this year because some of it went in early. But again, that's something that we see off the combine. Those are the 3 biggest single items we need to look at. If I'm going to throw one other item in here, just for giggles, when I did my cotton balance sheet, I wasn't at 3.5, I was at 3.0. And we saw really good export sales. They rolled over 1.1 billion, or excuse me, 1.1 export sales from last year, 1.1 million bales. So there's plenty of demand for cotton. So anything here that's of a bullish inkling will be a big surprise to the cotton market. And, and then there's the whole story around the wheat, because the wheat has really been holding us up here a little bit. And if we see, that wheat number get cut below what expectations are, that will be yet another piece of a bullish puzzle. On the other hand, if we see that yield hold at 179 and these ending stocks continue to be up here above, let's say 1.4, Market may not like that as much, and if we see anything, something to change in the beans, I don't think we're going to see a big thing in the beans, but something to raise this number, this 155 number, up to say 175, the beans won't like it. Now, the way the market's leaning, the way it's setting coming in here just a couple of minutes before the report, everyone's selling and everyone's a little bit nervous. You could see that if we get a bullish surprise, particularly in these soybeans, that market could snap and reverse in a hurry.
One thing that, and we're going to visit with this after the numbers are released, but we got a lot of farmers on the call today. We got a lot of agents that work closely with farmers. One thing, and I look and I see a lot of familiar names. There's going to be, farmers are going to ask this question. If given an opportunity to put soybeans or corn in the bin coming out of harvest, which one would you prefer doing? This is an excellent example. This report right here helps us gauge that. The carry-out numbers that we're dealing with this year going into, again, it's a transitional report, are really going to help answer some of those questions. Do we want to have beans that we're long basis on in March, or do we want to have corn? This report's going to help us make that decision, and we'll talk about it shortly thereafter. Now, one thing that we do know, if we've got wheat in the bin right now, sterling, pretty good commodity to have in the bin, especially if it's soft red. Some guys think about moving that out in the month of August. You might want to think twice. There's some pretty big carries in wheat, but I know how logistics work. A lot of y'all like to get bins empty prior to harvest, but wheat looks like king in regard to carry right now.
Absolutely. And here, remember, of all these markets, wheat is the most global. And I know they're having crop problems over in France right now. I was talking to one of my friends in Paris and talking about fields getting flooded out, and they already cut production once. So if we see European wheat problems, that's only going to add to this. And we saw Paris wheat here day before yesterday hit yet another new life of contract high.
We're seconds away from a release by my clock. Are you seeing any numbers come through?
Right now we're 10:59 and 38 seconds, so we are just about 20 seconds away. You see this actual column right here? When that report is released, that column will populate. So we're about 9 seconds away now.
I'm going to flip over to quotes on my screen, so I'll let you kind of give
Boom. And our corn ending stocks number, 1242, pretty much a little bit under expectation. Looks like I hit that ball pretty hard here. Soybean ending stocks came in at 155, sharply unchanged. Soybean yields, they cut soybean yields a little bit here. So that's something that's a little unusual for the August. And again, looks like the street got it pretty close. Corn yields here, 174.6. So we shaved 5 off of that. And looking down here at our cotton ending stocks, 3.0. Where'd you hear that, Brooks? Where'd you hear that?
Heard that one. Yeah, pretty good. We're seeing a little reaction in the market right now.
It's up 20.
Yeah, so a big turnaround.
And beans have reversed, went from down 16 to up 16 almost instantaneously. That's why trying to trade these reports can very often be a fool's adventure, because things move very, very quickly. Wheat yield per acre, that notice here, we got that cut. We're at 44.5. So again, and let's see what we got here for wheat, total wheat ending stock, 627, a little bit below the expectation, and we cut that here as well. So.
Wheat's on fire right now, up 20 in both Chicago and Kansas City. Sterling, have you seen any reaction in the cotton market? I'm not getting any kind of...
I don't have real-time quotes for cotton. I'm 15 minutes delayed. I would imagine the cotton is moving higher, though, just looking. One thing, where they picked up, here you see where we have these ending stocks, the same for soybeans? Notice, we increased last year's carryout by 15, so that actually, our total soybean production, 4.339, was down noticeably from 4.4 last time around.
interesting, kind of going backwards and adjusting some numbers there. So let's look at these one more time here, so you can see that big decrease in corn. Something Sterling pointed out, and you got it. Hats off to Sterling. He felt like this was going to be a market mover one way or the other. Significant. The three, I think, maybe four things he told us to look out for. If you remember that corn number, that 174.6 production number, a big one. On beans, that 50 was another one. Sterling, you were talking about that carry out on corn, which was virtually unchanged, a smidgen lower, but not a big change there. But 2 out of 3 have definitely moved the market there.
Absolutely, and something that I want to point out here, looking around the corner, yields don't go up in September for corn very often. In fact, we do a pretty good job of cutting them in September. So, looking around the corner, this number, this 174, probably isn't going to get bigger. And pointing back to those drought maps that you talked about earlier, corn right now needs water. And if you're not getting it, you're going to see noticeable yield damage here. And so we may see that number get a little bit smaller, and that could easily tighten this number back quite a little bit. When we publish estimates, I do two. I do one, what I think the USDA is going to say, and one, what I think it's going to end up being. And my number where we're going to end up being is pointed at 1000, right at 1 billion bushels. And that's, factoring in some reasonable losses and some reasonable increases in exports. So looking around the corner here, this report may very well set the tone for the next 2 to 3 weeks pretty easily here.
So, Sterling, I've got a question that just came in, and I know this applies to a couple viewers because I think my brother is actually viewing this too. And I'll table talk some of his corn position right now because it's also some of mine with production that we have in the field. We've got a 5/20 December call option out there. So in other words, we sold futures as the market was approaching $5. It looked pretty good. It's almost $1 below where the market was at. We bought 5/20 December call options. We know that time is ticking away on that faster each and every day. We're seeing the board now at 581. I'm inclined to want to roll that call option and take some money that we've made from it, reinvest in another option out there that gives me some protection over a longer time period. I know you don't have option quotes right in front of you. What month would you move to right now? Would you move to a March? Would you move to a July? Where would you move that December?
I would look at moving into July, and you could probably safely maybe roll that up to a 620. If you want to play rough, you could roll that into a December 620. That's only 40 cents away. And if you're right, you're going to hit the jackpot.
So you're not buying as much time there. You're hoping on a market that moves relatively quickly over the next 2 or 3 months. So good question that was posed. I got another one coming in here from a viewer. Very few soybeans hedged right now. How high can they go? Essentially, is the question, and I'm going to go ahead and step in here. These numbers, in my mind, when you key these into a balance sheet for next year, it's kind of an impossible situation. So what Sterling will always tell you, you cannot have anything below 0 in carryout because you're not going to crush air, you're not going to export air. You essentially can't do it. So we've got some changes, but that's the type of scenario that we're setting ourselves up for. We're setting ourselves up for when I say an impossible situation, I joke around because we will figure out a way, price will figure out a way to ration our demand. How high can soybeans go? They can go considerably higher. Could you see a 15 in front of them? Yes. Am I that bullish? I'm probably bullish. Sterling would probably agree we're bullish, but if you are turning your beans into cash in the next 3 months, which a lot of you will, it doesn't mean do not take action. So the second part of the question, you guys can't see this, is, what do we do? You look to buy put options here based off the November. They don't have a lot of time value with basis levels. I see a lot of you from the Midwest on A lot of people will. A put option is the only way to go in my mind right now. If you've got time and you've got bins, you're not going to have to turn that crop into cash. I think you've got some opportunities in front of you. But for those of you who will be pricing these beans in the fall, a put option is really a nice play right now. Sterling, any?
I would completely agree with that. And getting back to basis, South American soybean crop was short. They're not going to have any new beans, for a while. Probably, again, typically, start seeing them show up in January and February. That's going to leave a big void for soybeans leading up until then. We know China is hungry. We know China is increasing their hog supply. We know they're increasing the weight of those hogs. And yes, they're talking about feeding them other things. Well, at the end of the day, they're still going to be feeding them soybean meal. So that means China's going to have one place to go looking for soybeans. And that should be, I think, constructive for basis. And normally when we see things that are constructive for basis, typically those are also constructive for the board. And remember, we don't have this crop home yet. It's, they already shaved yields a little bit here. So I don't see, any big changes coming on that's going to increase yields. Seeing soybean yields again on any of this stuff going up when we get, start coming in here into late August into September, doesn't happen very often.
So right before we got the release, I talked about corn versus beans in the bin, and for a lot of you, it's logistics. You've got bins that are corn, you've got bins that are beans. I get it. If you've got an in between here, which one do you want to store long term? First off, the good news is basis on both should be really strong. The competition, and it does depend on where you're at in the country. I'm going to speak to the majority of the country, which is your I states and south. This may not necessarily be the case in your northwestern corn belt, your northern corn belt. It looks as if right now the tightness is going to be in soybeans. If you want to have one commodity from a basis standpoint that you're long March, April, May, June, July of next year, I think that you're going to have a lot of scavenging for soybeans out there. That's a little bit different than what we're experiencing right now, at least in my neck of the woods. We're seeing some basis levels on corn well over $1 over the board. In some cases, $1.25, $1.50 over the board. Interestingly enough, I think processors did a really great job this year of being bought into the future with basis ownership. They realized there was an issue. They've rationed. We've seen the last 2 quarters on crush be slightly lower than expectation. This year, I think they look at these numbers a little bit different. I think they look at these numbers, and we're going to see some really good basis levels, early on for both corn and beans. But I think in the end, they're really going to have to scrape it out to get beans throughout the summer. Sterling, any thoughts on that?
Yeah, scavenging for beans is going to be a reality. We have a tightness in the corn market that's a board tightness. In soybeans, it's a physical tightness. So there may be a little more speculative interest in buying corn, but at the end of the day, soybeans are probably going to be harder to come by. And I could probably say the same thing about wheat as well globally.
Yeah. So to answer that question, I like soybeans in the bin versus corn if you can do that. I realize logistics is it's a lot easier to farm on paper than it is actually go out and farm in the field. So it's easier said than done. But when in doubt, I would probably try to stick those soybeans in a bin for basis play later on.
Yeah, absolutely. I would definitely agree with that. And, you're going to have competition here because I think you're going to see good export demand for corn, and that is going to lift basis. And remember, we're going to start looking at risk in South America in about 2 weeks. And I don't need to tell you about the coffee market and the strange weather we've had down there. So if that continues and we see more problems with that, that's something that's going to drive risk premium into both of these items, and wheat too, for that matter.
Sterling, I'll kind of end this. I had a question come through. It probably doesn't apply to a lot of our viewers. I don't think we've got a lot of wheat producers on here today, just looking at it. But whenever we look at this wheat market, and this is a good point. Back in 2008, you probably remember the wheat market. You probably remember that there was some swings. I believe it was 2008, maybe like $2.40 future swings in a day. The board was really decoupled from the cash market. And what I mean by that is if you remember, we saw futures levels go up to around $10, and basis in some cases was $2 and $2.20 under at a lot of cash markets. You made mention that wheat's a global crop, and while there's some issues out there, wheat's usually the one that can recover the quickest. So the question is, should you be concerned about writing a futures-only contract or a hedge to arrive, or maybe even selling futures if you're a producer and not having basis set? And I don't think we're to that point yet, because we've got an overall physical demand for the commodity, and we're seeing it in corn and soybeans, where in 2008 we were a little bit decoupled from other commodities. In my mind, I think you're okay right now with not having that basis set. I don't see us in a situation like we were in 08, where we had, actually the wheat fundamentals were pretty strong. We had supply. We were going up in conjunction with other commodities. That's why we were $2 and $2.50 under the board when it came to cash. I don't see us having that problem this year. I think it's okay to make that futures only, and we're seeing some great opportunities. We're seeing some mid-7 opportunities for next year's wheat on Chicago and Kansas City, I think.
Yeah, Chicago and Kansas City. I think if it's Minneapolis, we got a different story, because you remember what happened to Minneapolis in 2008. Everything got really strange. And could that happen again this year? Well, we'll see. But, yeah, with Chicago, definitely.
I had a lot of questions the last week about, Minneapolis wheat. And unfortunately, when we look at options plays in Minneapolis, there's just not a lot of volume, not a lot of liquidity, a really, really challenging situation for those folks who try to use derivatives. I'll talk about those a lot in the GMO, but essentially outside of being long a call or long a put, if you can find that liquid market so you can offset with futures, that's about the only plays that I would recommend. Sterling.
Yeah, Minneapolis is tough. I used to be a trader at CHS, and we'd go in here and we'd try and buy those and try and make markets and stuff, and it's just, you're not dealing with what you're dealing with in Chicago. And if you look at a correlation trade or something, I can help you maybe set something up where maybe we can use some artificial things where it's a little more liquid to give you at least a little bit of access. But trying to do it just in Minneapolis, that's tough.
Sterling, with your experience on there, and one of our viewers is Jason, and Jason had asked me this question last week, and, outside of, if you can find that liquid market to buy the put and buy the call, my advice was to be very, very careful about what we did in futures there. Would you jump across, if you found yourself up there short bushels, not necessarily short bushels on what you produce, just an overall short crop, and you want to try to participate. If you jumped into Kansas City or Chicago, I know you got to be real careful with that. Wanted to follow the market up, which market would you choose right now?
Chicago. Kansas City has been broken for a while. Normally we would see Kansas City wheat trade above Chicago, and we've had problems with that. If Wall Street wants to come in here and buy wheat, they're not going to buy much Minneapolis. They'll buy some, but they will buy Chicago. So that is where the liquidity is. And I know it's kind of an unnatural thing, and it doesn't make a lot of sense, but we have to ski the slope we're on. So
I think, Jason, that's the advice that I had written you earlier in the week on that, as far as, if you want to try to follow this market, jump into one of the deferred months in Chicago with call options. They're still fairly liquid there, so it's nice to know Sterling backed that up. Well, an awesome report. Christy, before we kind of turn it back over, we're seeing corn trade almost 30 cents higher.
Yeah.
Market up around 20. Dragging its feet just a little bit compared to corn. The wheat markets are all up in the upper 20s, regardless of the three indices. out there. So a pretty good report. Bullish report going into harvest. You don't get those too often. A lot of the country, a lot of our viewers on here outside of the folks up north in the Dakotas got some pretty good rains over the last week, so a great combination for a lot of our customers out there.
Yes.
Absolutely.
Thank you guys so much. Sterling, you were right. This did not disappoint. We do want to thank you all for attending today's live look at the WASDE. It's been recorded. We have recorded this event, and it will be available on our YouTube channel, and a link will be provided in our DMO soon. If you have any questions, we ask that you send those to us at marketinginfo@sointernational.com. I will also put that in the comments. We really appreciate your being interactive with us, engaging with us, and asking those questions. We would love for you to continue that dialogue. So please send us an email to that address, marketinginfo@sampointernational.com, and we will respond to you as soon as possible. Any closing comments, guys?
You know, I got a comment based on our call option on corn question that came in. Sterling recommended that if you want to be gutsy, roll it again in the December. And I've had actually 2 replies via text about that. That seems like that may be the appealing play out there. So we've got some bullish folks in the audience. And Sterling, one of the questions was, what was the strike you mentioned? I think I illustrated a 520, which is what I've got bought right now. I think you said
roll it up a buck, 620.
Yeah. Good question.
And
I like the fundamental questions that farmers have on their mind. I think that's what brings value to you guys as agents, and also to us, AgriSampo, to the farmer out there. So keep those.
And one other thing, I don't want to blow my horn, but we were talking about not having accurate reports since 2014. And here we go. We have a little contest at Bloomberg for analysts. See how they come in, and look who came in #1 in the world for corn ending stocks.
Hey, there you go. There you go.
There you go.
The Whisper Champion.
There we go.
So you're kind of like the stocks whisperer. Is that what that means?
Pretty much, yep. All righty.
Well, thank you all again so much for joining us. Have a great day.
You too, and there will be full coverage on this in today's DMO. Talk to you in a bit.